Good morning, everybody. My name is Harqs Singh. I'm CTO of InfraPartners. I've been in the data center industry for a little while. I think there's a few familiar faces in the audience. I'm going to take you through today some views higher up the stack, especially in the AI space. You know, we're all questioning whether all of these gigawatts are a bubble, how much of it is real, how much of the demand is underpinned. And so we're going to talk about a few trends higher up the stack, and then we'll talk about the data center growth and really focus a little bit on the supply chain. We know power is an issue, of course. We spoke about that at the last panel. But also we're seeing a lot of pressure in the supply chain, and I'll share some of our observations. And it'll be good during the question phase at the end, if you have seen some of these experiences yourself, to share them with the group. This is like your TV at home. Where do you point the controller? Oh, there we go. So firstly, I think a couple of years ago, you would have all seen the chart about how ChatGPT got to 1 million users faster than any app in history. And so obviously it got off to a great start, and then we thought we'd sort of track how has it gone since then. And so you'll see from this chart here that there is currently estimated 480 million direct users of ChatGPT. So that's people who have gone to OpenAI and are using it directly. And so that data comes from Sam and Brad at OpenAI, and then that forecast line came from ChatGPT's 4.0 deep research model, so I think they'd stand behind it. So I think you can see a pathway to possibly 1 billion users by the time we get to 2030. That's direct users. Now, if you then look at the actual demographics of the users, this is really interesting. Now, it's a little bit behind the previous chart, so it's probably a few months old, because it's only when there was 370 million users. But what it showed was 2/3 of the users are male. So that's interesting. I'm not sure why. But more importantly, I think what it shows is 45% of its users are under the age of 24. So I think it's really interesting in terms of there's a lot of growth to happen here. But I think it's also interesting that the next generation of folks that are coming into the workplace are using ChatGPT more than anybody. So I think you're going to continue to see this growth. If you then overlay third-party apps, APIs, and those kind of users, the actual numbers are much bigger. So right now they're at 900 million users, growing to, their forecast suggests, 2 billion. So that's a good signal. So there's all these people that have signed up. There are all these people that are using this app directly or indirectly. Now, remember, these numbers don't include, Google's Gemini model. They don't include Meta's Llama model. So you could add hundreds of millions of more users on top of that. This is just ChatGPT as the leader in the market. If you then look at all these people have signed up, but are they actually doing anything on the platform? And I think this is really telling. This is a chart from Sequoia. And what it shows is it shows daily active users and monthly active users. And so what we're seeing is that ChatGPT, in the last 2 years, has got close to Reddit already in terms of daily visits and monthly visits in terms of users. And so I would expect that to continue to grow. So a lot of folks are using this AI, and they're using it a lot. I myself actually have displaced Google as my first landing page. I go straight to ChatGPT to see how I could leverage this before I try to search through normal search engines. And I think, I think you'll start to see more and more people are going to use this more actively. As you go higher up the stack, the users are there. Hundreds of millions of users who are going there daily and monthly. So this is a chart from Sequoia as well, which shows in the cloud space, mobile space, now AI space, which apps have got to $1 billion of revenue. Not unicorns, not billion-dollar valuations, but actually got to $1 billion of revenue. And so you can see at the infra level, security at the app level, and they then translated it for AI. And the truth is, the apps are not quite there yet. They're going to come because people are waiting for them. But right now, there's a big opportunity in the stack for there to be billion-dollar revenue firms. And so it's starting to become real. You've got ChatGPT. Here are the first cohort of apps that are getting traction. My challenge to you guys is, do you know these apps? And if you don't, I think you should, right? I think you should be looking at what do these apps enable and how can they help you enable what you're doing. And then there's a long list of apps that are coming. And these are not the traditional ones that you would see, remember, or talk to your friends about. And so also, there's a big opportunity. You can, if you're interested, you could add your logo too. But I think this is really interesting because the apps are coming, the users are there. These are really good signals that the demand we've spoken about in this industry is real. So this is a chart which was released about 3 weeks ago by McKinsey. So if we switch gears and look at the data center space for a second. So the data center space, we are about here on this chart. So what this chart shows is the estimated demand for data center space in gigawatts up to 2030. And there's a base case, which is that middle line. There's a low case and a high case. And what you see is today, we're about 70 gigawatts, 60 to 70 gigawatts globally in terms of data centers that were built. Now, those data centers have been built over the last 25, 30 years, right? And the growth vector on the demand side, pick your gigawatts, right? It's tens. You can look at McKinsey, you can look at, Goldman Sachs, you can look at any industry research. There's loads of them out there right now that are saying there's gigawatts of growth coming. It's tens of gigawatts. We can argue exactly what it is. My personal view is somewhere between 50 to 80. But, depends on who you believe. It's still a big number. So what we're saying is we have built 60 to 70 gigawatts globally over the last 25 to 30 years. Now, as an industry, we are building about 5 gigawatts of data center capacity a year. And we need to deliver this growth in the next 4.5 years, right? So, this line here on the low end, that's 100 gigawatts of growth in 4.5 years. The medium one is 150 gigawatts, and the top one is 220. So it's a significant number in terms of how we need to grow. That means, as the panel said, we need to find power. There is pockets of power. It's in locations that are not tier 1, tier 2 cities, which is why Crusoe went to West Texas and Abilene. Data centers are going to go where the power is. There is power, it's just not where we'd like it, is what people are saying, especially some of the investors. But if you start to look on the supply side, how much does the supply chain need to grow to support these metrics? It's a much bigger number. So, you can decide what number you believe in terms of growth, in terms of what's going to happen over the next 4.5 years, how much of it is underpinned by data on the AI side. But the truth is, we're going to have to grow significantly, whosever numbers you believe. And so we're going to talk a little bit about the supply chain as well, because the supply chain is where we're seeing quite a lot of pressure, and we're seeing some behaviors that are not what you'd traditionally expect. So the idea is capital allocators, if you want to monetize this growth and this opportunity, you will need to think about deploying capital differently, because you're not going to get this kind of growth just by doing it in a traditional way. On the same piece of research from McKinsey, they actually came out with what are the bottlenecks to monetizing this growth and operationalizing a data center. So first thing is, can you get chips? Can you get GPUs? If you want to play in the GPU place, have you actually got a commitment from NVIDIA, typically, to be able to get GPUs? The next thing is finding sites. Finding sites, as the panel said earlier, that have power or have good quality power and that are reliable is a challenge right now. So site selection is important. The third thing is long lead items. There are items that you procure for data centers, which generators as an example, some form factors, you can't get them for 2 years. So if you're trying to monetize that and actually trying to get a return on your investment, you need to get sites up and running as quickly as possible. So you need to start thinking creatively around what you can do around supply chain of some of the critical items. And the last thing is skilled labor. So in the construction industry generally, forget data centers for a second, there is a lack of skilled labor in the mechanical, electrical, and construction side. When you then look at the data center side, it's even more acute. The Crusoe example in Stargate has 5,000 people that are on site building that data center. And they didn't have enough people in the city, so they've had to fly them in from all parts of the US. Now, if I said to you guys, hey, you live in Europe or London or wherever you live, and I say, hey, I want to fly you out to some of the most remote parts of the country to be there for 4 years, you're probably going to say, how much will I make? What's the return for my time, right? And then is the number big enough for me to be away from my friends and family for a reasonable amount of time to go be somewhere very remote? And so what that does is, from a labor cost perspective, it really inflates the cost. And so your cost to build in some of these remote locations are going to be significant if you're doing things in the traditional way. And so if you can find the people, you're going to have to pay for them, and that's going to increase your cost to build and cost to deliver. So we have been, at InfraPartners, we have been focused on this, and we look to solve these two for you. So by centralizing our prefabrication, you don't need 80% of the build is done in the factory. You don't need people on site. You need some people, but not a lot of people. You can do some really smart things around design. You can do some really smart things about warehousing, where you can mitigate against the long lead items. And so we're looking to solve these two barriers here. With a good, strong partner of ours, DIX Ventures, we're also identifying sites. So we're looking to solve 3 of the 4 problems. I can't get you chips. If you want chips, don't ask me for them. You'll have to go to NVIDIA directly. But one thing I will tell you is chips are very expensive. If you look at the cost of building a GPU cloud, the cost of the chips is 3x the cost of building the data center. So if you're going to go buy chips and you want to go from being a data center provider to being a cloud provider, make sure you've got friends and colleagues who have deep pockets. But the returns are very attractive if you can do it. So you should consider that. And obviously capital, as folks said earlier, capital in this market at the moment, there's a lot of capital available. Just make sure you partner with the right folks. So on the supply chain side, I'm just going to mention a few things that we're seeing and that we've heard from clients, which has been really interesting. So firstly, we've got this technical challenge where folks are going liquid first and building for GPUs and AI, which, right now, if you've got the latest Blackwell chips, you can charge a premium per hour as a GPU provider, and the returns are very good. However, we're building data centers now with liquid cooling to the chip. We're building for weights we've never expected of racks in data centers. So the designs for these GPU racks are going to be very different than the traditional designs that we've done. And so everything we've done in history is interesting and good for cloud, but as you start to play in the AI GPU space, you'll need to think about things differently, and there's different designs. So nobody has deep history here. There isn't standards. There isn't metrics. So there's this whole new industry in the GPU world which will need to mature, which we've matured in the CPU world over the last 20 years. But in the GPU race, I call it, because it is a race. Whoever gets there quicker wants to get majority market share. Just like Amazon did in cloud, who took 67% market share, everybody's racing to be the majority, the market leader in the general intelligence space. That's why all these folks are building so quickly and there's so much demand. Inertia. As an industry, we like to think we're innovative, but I'll put it out there to you, we're not. And the reason I say this is liquid cooling direct to chip, that wasn't an innovation from our industry. It was forced on us by NVIDIA. Liquid cooling has been around for many years. I know a number of you have been in this industry for a while. There was bake-offs, chill-offs. These things have been put in labs 10, 15 years ago, but they never got into mainstream because of inertia. What everyone does in this industry is they go to a design house, and the designers take the last design, they rub off one name, they put your name on, and they go, that's $3 million, please. Right? The construction folks go, oh, I've done X hundred megawatts of data center space, and I like working with these people or this company, and they go back to whoever they worked with in the past, and there's actually no driver for change. So I do give credit to NVIDIA for forcing this change, right? But we're not innovative as an industry, and I challenge anybody that says we are as to whether we actually change things from a building data centers perspective. Yes, we've made some great changes on sustainability and some other aspects, but in terms of fundamentally building the data center, it's been pushed upon us. And I do really like Jensen's roadmap that he shared with everybody, where he's showing how there's going to be big changes coming in the future, because I think that's going to force us again to innovate. And that's my next point, rapid evolution. The future data center, we've talked about data, there was a conversation here about a 25-year-old data center. We've talked about data centers being on, what's the useful life? Is it 10, 15, 20 years? But there's always multiple generations of IT go through a data center. What we're going to see in the future is data centers actually need to change at the pace of tech change. So you need to actually refresh your data center like you used to refresh your servers every 3 to 5 years. Now, the good thing is, these GPUs and the price people are paying for them, there's enough return there to be able to make your return in a 4 to 6 year period and then refresh and go again using the latest GPU technology and getting the best premium price on the market. So the economics are there, but it means also we are going to have to change as an industry to know we need to build data centers that are flexible and that can be changed to accommodate the latest technology, because the last generation will not support us. So stress supply chain. We see this talking to a number of our clients. There's a number of folks in the data industry that are a bit overwhelmed, I would say, in the supply chain. We've spoke to folks that have said they've worked with design houses, started a project, and halfway through the design house stopped and just walked away. And they said it's because there's too much demand, they're too overwhelmed, and just walked away halfway through doing a design. So I think who you partner with right now is really important, and it's really key. Because what you're going to find is that whether it's 3, 5, 10x increase in what we need to do on the supply chain side, that's going to create a lot of pressure on the supply chain, and margins and costs will likely go up, demand and supply. And then supply chain constraints, as I said, generators, very long lead items, transformers. There is some smart things you can do here, but you need to really plan early and actually do some things differently around designs. We're seeing generatorless designs where generators can be added later. So the electrical design is there so that you can add them later if needed, especially from an asset value perspective. I know a lot of the investors are looking at asset value. So what they're saying is it needs to have the ability to do that to preserve asset value. Because if I need to change this training data center into a cloud data center, because we get to a point where all the training is done, which I don't believe will happen, then I've got the ability to flex that and not lose the value of the asset or reduce the value of the asset. And then we've talked about this standardization and at scale. What we're doing is you should have one design, you should go multiple times, especially in the inference space. So as you go to inference and you're actually pushing out inference data centers, there's no other way to do it. So on the manufacturing side, that was all the design challenges we're seeing. Now, if you go to the manufacturing side, schedule certainty is the biggest thing we hear from clients and the most important thing we hear from investors because they want to generate a return as quick as possible on their deployed capital. We, InfraPartners, are in the prefab space, so I didn't take any of our comments. This comment here actually comes from a prefabrication paper by McKinsey in construction, not in data centers, in construction generally, because this is a concept that is happening across the whole construction industry. And so there is the ability to save up to 50% of the time by compressing and parallelizing a bunch of the work. And that's where you get the value from, essentially. And so rather than going sequential as normal traditional construction, that's the value. Labor shortage, as I mentioned, this solves for, we do 80% in the factory, 20% on site. This solves for a lot of the issues you have around the world trying to get skilled tradespeople to go to places they don't want to go to. Our belief is data centers will go to remote locations now. They'll go where the power is. As per Crusoe going to West Texas, if you want to monetize some of that demand, you will need to go where the power is. So tier 2 remote locations means it's going to be even harder to find supply chains that actually support that location, and it's going to be harder to find people to go to places they don't want to go to, especially to build data centers that are going to take 4 years, regardless of the monetary value. Flexibility, I think the common thing we hear from everybody is I need flexibility. Why? Because the truth of it is, 2 years ago, maybe 2.5 years ago, nobody was talking about deploying 132 kilowatt cabinets in data centers. Nobody was talking about direct liquid cooling to the chip. right? Nobody was talking about that. Even the smartest people in this industry, and I'm blessed enough to know some of them, right? They were not talking about this, right? It was forced upon us with this growth that's coming with NVIDIA and their designs. So everyone has said, what I need more than anything now is flexibility. Engineer me flexibility, be able to adapt to change. That's the most important thing, because I truly don't know what's coming, right? And although Jensen shared some of his roadmap, some of the stuff is not quite baked, as you would expect from a roadmap. But flexibility is the most important thing. Quality, we stand behind quality being improved in a centralized location for consistency, using the same teams. And the last thing, which is really important, is it reduces accidents on site, right? I know health and safety sometimes is sort of bottom of the list, but we're quite proud that we all know sites where people have died, right? Construction workers have died and so forth. So if we can reduce that and reduce people dying by building data centers, that's a positive thing. And so from a health and safety perspective, that's important. So this is my pitch. The only way to solve for a lot of these issues is using something prefabricated. And I'm not even saying you should look to InfraPartners to do this. As a concept, you should look at it generally in the industry. This is just a few pictures of what we're doing. We have a facility in Romania. People are always shocked when I say to them we have our own facility, because they think we're subbing it to somebody. But we actually do have our own facility where we're actually building, prefabricating data centers. We have a GPU design for GB200s, and we have a CPU design for cloud, essentially. We have also expanded into the US. We have opened our Houston facility, which is a lot bigger. The US market is about 6x larger than the European market at the moment. And so a lot of the frontier models are going to be trained in the US. A lot of the demand is going to be there, which is why we've done that. And these are just some pictures of our modules in our site where we're building these prefabricated data centers. So with that, we work with pretty much everybody. We don't have favorites. You might have favorites, but we don't have favorites, depending on who you got agreements with. And so with that, I'll be here, so questions you can ask.